Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Equities continue to rally for the sixth day in a row amidst volatility. The Sensex and the Nifty gain over 0.5% each, helped by financial stocks. The 4% jump over the week makes this the best 7-day performance for the Sensex and the Nifty since February of last year.
Truly unhedged portion of our so-called unhedged ECB outstandings are far too lower than the $79 billion. The optimal hedge ratio condition of India at the moment is comfortably satisfied in the case of the stock of ECBs.
Even as the rupee trades in a narrow range below $80 per dollar, RBI governor moves to extinguish worries over outstanding external commercial borrowing payments, as only 44% of the total outstanding ECBs are unhedged, reassures the street that RBI will continue to stem forex market volatility.
On the one hand, you have to support innovation. On the other hand, you have to maintain financial stability.
RBI promises digital lending norms will be announced soon. Governor Das defends the delay, saying the central bank is treading with caution so as to not stifle innovation, urges digital lending firms to only engage in licensed activities. All eyes on Reliance Industries, which will report first quarter numbers later today. Analysts expect a strong performance in the oil to chemical business despite multiple variables. A strong showing in the telecom business is also widely expected thanks to robust subscriber addition.
Our focus on innovations is looking at going up the pyramid of benefits and ensuring that increasingly our focus remains on enhanced benefits and our strengthening our premium portfolio.
FMCG giant HUL points to lower consumption demand due to rising inflation as a red flag, but adds that growth in its premium segment is acting as a buffer. MD Sanjeev Mehta tells CNBC-TV18 the company is betting on the health supplement business as a possible future engine of growth. The Department of Telecom gears up to hold mock auctions for 5G spectrum, says the move will help identify and solve teething issues before the actual auctions begin on the 26th of July. Former U.S. President Donald Trump accused of dereliction of duty by the House committee probing the Capitol riots on the 6th of January last year. This after witnesses testified that Trump watched the riots on television for over 2.5 hours and dismissed advice from top aides to call off the mob. Dinesh Gunawardene takes oath as the Prime Minister of Sri Lanka, even as people continue to protest the formation of a new government under President Ranil Wickremesinghe. Gunawardene has held multiple portfolios under the now deposed Gotabaya Rajapaksa government. All of that and more coming up for you, but let's start with a deeper dive into our top story. The stock markets got off to a steady start, and despite bouts of choppiness, the indices managing to end strongly in the green. This is the 6th consecutive day of gains for the markets, and today's up move was helped by a smart move up in financial stocks. Mid-cap index lost some ground though, and the small-cap index ended flat. Today's gains also cemented a 4% jump for the Sensex and the Nifty, making this the best weekly performance since February of 2021. IT stocks were the biggest gainers of the week, so that's the market performance closing out the week. Anuj standing by to take us through the days and the week's trading action. Anuj, a pretty good week for the equity markets, hasn't it?
What a week on Dalal Street. Just the kind of the week that the bulls needed, in complete control through the week. Not a single day when the market was in the red. All 5 days the market ended in green. In fact, if you add last Friday, it's 6 straight days of gains for the Nifty. And for the week, it was broad-based. The Nifty was up 4%, mid-cap was up 4%, the Bank Nifty traded above the 200-day moving average. And just to give you an example, Ultratech surged after numbers despite already rallying and pre-positioning. Financials led the move today, so HDFC Bank and Axis Bank were higher. Ultratech, as I said, reacting to numbers, taking Grasim along with it. UPL did well as well. Ahead of numbers, very strong moves in ICICI Bank and Kotak, though Reliance was slightly nervous and Infosys was quite weak heading into the numbers. What next then? Of course, Monday morning, straight away you react to 30% of the Nifty in terms of earnings. And then you move on. The Nifty, my sense is now eyeing the 200-day moving average, which is somewhere around 17,050.
Bulls in control. Anuj, many thanks for joining us. From the equity markets to the currency market, where the rupee traded a few notches below the 80 per dollar mark, closing the session slightly higher at 79 rupees 86 paise to a dollar. The central bank is monitoring the rupee's movement very closely. Reserve Bank Governor Shaktikanta Das reassuring the street that the RBI will continue to stem forex market volatility, adding that the central bank has zero tolerance for volatile or bumpy movements. As to urging concerns over outstanding external commercial borrowing payments, the governor said only 44% of total outstanding ECBs are unhedged.
A predominant part of the outstanding ECBs is effectively hedged. Let me elaborate. According to the June 22, that is June 2022, the last month's financial stability report of the Reserve Bank, the outstanding ECBs of the outstanding ECBs of 180 billion US dollars, 44% or 79 billion US dollars is unhedged. Now, this includes about 40 billion dollars liabilities of public sector companies, mainly in the petroleum, railways, and power sectors, which have assets with a natural hedge character. Besides, being public sector entities, their foreign exchange risk, if any, can be absorbed by the government if so required, but that possibility is highly unlikely. Due to the RBI's actions, including measures to encourage inflows, the movements of the rupee have been relatively smooth and orderly. By eschewing sudden and volatile shifts, we have ensured that expectations remain anchored and forex market functions in a stable and liquid manner. We will continue to engage with the forex market and ensure that the rupee finds its level in line with its fundamentals. I would like to reiterate that we have no particular level of the rupee in mind, but we would like to ensure its orderly evolution, and we have zero tolerance for volatile and bumpy movements.
Well, that's the RBI governor there. Lata joins us now with more on what the street has made of the RBI's governor's reassurance there as far as the currency is concerned. Lata, the RBI making it clear that it will do whatever necessary to ensure that there is no undue volatility in the currency movement. But more importantly, the governor's message there on ECBs providing some comfort?
Well, there has been a fear going around that there is a lot of unhedged ECBs. The total ECBs in India is 179 billion. And there was a worry that a lot of it is going to mature and they are unhedged. The Reserve Bank governor actually assuaged fears on that score. He pointed out that, yes, the unhedged outstanding ECBs are 79 billion, but that's not an alarming number because a large part of that is held by companies which have natural hedges in the form of export earnings, and that's why they don't hedge. Another substantial part is public sector units, which have these external commercial borrowings, and they usually, like for instance, petroleum, oil companies, they also have export earnings because of the petroleum products value added that they export, and also they're backed by the sovereign. So if at all the hedge is not there, the sovereign backing is there to pay back the loan. Therefore, this fears of unhedged positions is overdone. It's not that serious a position. And then he went on, of course, to generally give comfort to the market on the issue of the rupee itself. His point was, the global uncertainty, spillover of all central banks tightening, Ukraine war, have all led to this safe haven buying of the dollar, and that's impacting all currencies, whereas India has actually performed better than a lot of EM peers and better than also reserve currencies like the yen, which has depreciated about 15% year to date. Rupee is depreciated only 7%. And he went on to say that Reserve Bank is there with reserves and it is supplying the dollars because there is a mismatch. Import demand is more than the export availability. That is the mismatch we are providing. And that is what reserves are for. There's no alarm in the reserves going down. As he pointed out, you buy an umbrella to use it in the rain, and that's why the reserves are being used. And overall, the economy is resilient. The current account deficit, according to him, is modest. And the Reserve Bank will ensure that the rupee evolves, that it's to its correct value, and it is done without volatility. So basically, a lot of comfort for the market.
Yes, a lot of words of comfort coming in there from the governor for the market. Lata, many thanks for joining us. In fact, the governor's also promised that the much-awaited rules for digital lending will be released soon. He defended the delay in these rules, saying that the Reserve Bank is being cautious as it wants to strike a balance that promotes innovation, but without creating unnecessary financial risk or stifling growth. Take a listen.
And we will be issuing the relevant guidelines in this regard very shortly. On the one hand, you have to support innovation. You have to support something new, a new product or a new approach which is coming. You have to support that. At this other, that is one aspect. On the other hand, you have to maintain financial stability and see that undue leverage or risks are not built up. So therefore, you have to find a very delicate balance, and therefore we are dealing with the issue very carefully. I would feel in the next few days it would come out. I have said this even earlier also, that we are expecting it shortly.
Well, that is the RBI governor. Global crude oil prices heading higher after a two-day lull on the back of renewed fears of tight supplies and a resurgence in geopolitical tensions. Brent crude was trading over 1.6% higher, above $105 a barrel in early trade, while the NYMEX rose 1.5% to nearly $98 a barrel. Concerns over weak demand from the US and China keeping those gains in check. Well, Reliance Industries is set to report its numbers today. This is likely to be a quarter with several variables like higher refining margins, but also higher crude prices and freight costs in the O2C business. Analysts have been grappling with these variables to work out their expectations. Sonal Bhutra is standing by to tell us what we can expect. Sonal.
Very strong quarter. That is what is expected in quarter one of FY23 from Reliance Industries, and it will be driven by sustained momentum that we'll see in the oil to chemicals business. Now, that particular segment, remember, reported record high revenues in FY22. Quarter one is expected to be strong as well because remember, margins, refining margins have been quite strong. Singapore margins, they average around $21.4 per barrel mark, and that would mean that GRMs for Reliance Industries are expected at that $17 per barrel mark. Additionally, the reduction in windfall tax has come in as a positive for Reliance Industries as well. Consolidated EBITDA is expected to increase by 35% to come in at 42,000 crore rupees. Now, if we talk about more segments, that is Reliance Jio, that is also expected to see some growth, and that will be driven by higher subscriber base. Additionally, there will be an increase in their average revenue per user as well. So both these factors will contribute to growth in Reliance Jio. In retail as well, we'll see increase due to sustained strong performance. This particular segment has been firing on all cylinders. Now, what next? What are investors watching out for? Now, the big event to watch out for, apart from results, is the AGM. Any potential announcement is something that we'll be watching out for. Apart from that, any announcement on a renewable business stake sale, that will be taken positively. And additionally, any concrete timelines on the IPO of the consumer business will also be taken as positively. So putting it all together, in terms of consolidated numbers, there is an expectation of a 14.5% revenue growth, EBITDA expected to increase by 35%, margins an improvement to 17% mark. That's a good number, 17.7%, and profits accordingly will grow by 50%. So across the board, strong performance expected from Reliance.
Sonal, many thanks for joining us. Standard disclaimer on your screens. Network 18 and TV18, the companies that operate CNBC-TV18 are controlled by the Independent Media Trust, of which Reliance Industries is the sole beneficiary. It is time now for the big exclusive interview of the day. Sanjeev Mehta, the MD and CEO of FMCG giant HUL, has a word of caution on inflation, but says that growth in the premium segment for the company has acted as a buffer. Mehta tells me that HUL wants to bet big on health, vitamin and mineral supplements going forward, clarifying that the focus on the premium portfolio is not taking away from HUL's efforts to reach out to the bottom of the pyramid. Here's a slice of that chat.
So we have a very strong portfolio which caters to the bottom of the pyramid. But our focus on innovations is looking at going up the pyramid of benefits and ensuring that increasingly our focus remains on enhanced benefits and strengthening our premium portfolio. Our increased focus is on bringing in premium products, and premium products naturally would have margins which would be superior to the mass end of the portfolio.
And you can catch that conversation with Sanjeev Mehta, the MD and CEO, at 6 p.m. right here on CNBC-TV18 on my show On The Record. There is hope for taxpayers with credit due to them from the state or central governments from the pre-GST era. The Supreme Court has asked the CBIC and the GST Council to open a 60-day window to allow such taxpayers to apply for their due credit. Timsy joins us now with more. Timsy.
Well, in a landmark decision, the Supreme Court today ruled in favor of taxpayers where the credit was stuck, which was due to them in the previous regime, that is the pre-GST regime, by various state and central governments when they transited to the new regime, that is the GST regime. Supreme Court has asked CBIC and GST Council to open a 60-day window to clear these credits which are due to the taxpayers, and this 60-day window will start from 1st of September till 30th of October on GSTN, where all these taxpayers across the country can apply for their due credit pending to them by the various state and central government laws that were there pre-GST regime. Remember, taxpayers across the country had challenged this, seeking payment of old dues at various high courts, and the transitional credit of old regime was under, say, octroi, service tax, excise, VAT, etc. was due to them, and it did not get transited once the entire transition happened from pre-GST regime to post-GST regime in July 2017. What we are now given to understand is that GST Council will have to notify the SOPs to operationalize this window. Post this window is open, officers will have a window of 90 days to verify the claims which are being raised by the taxpayers. When we got back to government sources to check how much would be the quantum that the taxpayers are likely to get, well, government initially estimates around 500 crore rupees of dues, which is still pending with various state and central government to genuine taxpayers where the genuine credit was due and it was not being released since the window had expired and the transition did not provide any such clarity. And there are about 7,000 to 10,000 such SSCs which exist in the system where transitional credit could be passed on as soon as in the coming this window of 60 days from 1st of September. Let's see how soon government processes. Back to you.
Timsy, many thanks for joining us. One of India's longest-serving fund managers, Prashant Jain, has quit from the post of Chief Investment Officer at HDFC Mutual Fund. As the CIO, Jain managed assets over 90,000 crore rupees. He will be replaced by Chirag Setalvad and Shobhit Mehrotra. The HDFC AMC board approved the appointment of Setalvad as head of equities and Mehrotra as head of fixed income. The government for the first time has clarified that it is still examining the parliamentary panel report and draft data protection bill that was submitted in December last year. Sources tell us the bill is unlikely to be tabled in the current monsoon session of Parliament. We learn the government has completed consultations with industry but still assessing the impact of the data protection law for the startup ecosystem. From the aviation space, you can soon get to fly with the newly launched Akasa Air that's opened bookings for its flights today. The airline's first commercial flight will take off on the 7th of August from Mumbai to Ahmedabad using a Boeing 737 MAX plane. Following this, the airline will start operating flights between Bengaluru and Kochi from the 13th of August. June wasn't a great month for the aviation sector, with passenger traffic falling 13% versus the previous month. Indigo's passenger load factor fell by over 3%. Air India and SpiceJet saw a decline of 5%, while Go First passenger traffic fell the highest by nearly 8%. In Earnings Corner, Ultratech Cement posted a beat on all fronts in Q1, but when compared to last year, only revenues up over 28%, while net profit and EBITDA fell by more than 6% year-on-year. Margin also fell to over 20% versus 28% in the same quarter last year. We will head into a break, but up next, the Department of Telecom gears up to hold the mock auctions for the 5G spectrum auctions. That and more when we return. With 5G spectrum auctions just a few days away, the Telecom Department is conducting mock auctions today and tomorrow. The exercise is aimed at identifying and addressing any teething issues to ensure a smooth rollout on the 26th of July when the auctions kick off. 5G services will usher in high ultra speeds about 10 times faster than 4G, which will open the doors for new age services and business models.
5G is going to dramatically redraw the internet as we know it. It is going to bring to fore machine-to-machine communication. It is going to make the internet far more complex. We are at the same stage as the rest of the world. So we can really be providers of trusted digital products and solutions in the 5G era, 5G is really the next generation and the next frontier in terms of the mobile internet and the wireless internet. And I'm glad that more and more people are interested in being part of that movement.
Well, that is the Minister of State for Telecom, Rajiv Chandrasekhar. The run-up to the 5G spectrum auction has seen a clash between incumbent telecom companies and tech companies over captive 5G networks. Reema Tendulkar tells us more about the genesis of this battle. Reema.
Well, as you know, the Adani Group has decided to participate in the 5G spectrum auctions to launch their own captive networks. So what exactly is a captive networks and why are telecom operators contesting this move? Now think of a captive telecom network as a captive coal mine. You can use the services for your own consumption, but not for a commercial use. There are certain norms which have been issued by the DOT to set up a captive private network. Enterprises can build their own private networks by applying for a captive non-public network (CNPN) license, and they can get spectrum directly assigned from the government for a period of 10 years. The net worth of the applicant has to be 100 crores. While the licensee will not have to pay entry or license fee, there is a non-refundable application charge of 50,000 rupees. As I said, a CNPN license is cheaper, and that is because it cannot be used for providing commercial telecom services. Spectrum, which you acquire through an auction, is expensive because A, it's competitively bid, and B, it's eligible for commercial services. So now it brings us to the next question. If Adani had to buy spectrum for captive consumption only, why did they not wait for spectrum to be allocated instead of bidding in the open auctions as it's planning to at higher prices? Well, the reason is the timeline for this private captive network is still uncertain. The DOT is conducting demand studies. They will then seek recommendations from the TRAI, and that entire process could take 1 to 2 years. And there was always a potential risk of litigation from telcos. Adani's probably did not want to wait. Now, the next important point about this is that telcos don't want enterprises to own captive networks. Understandably so, right? 5G enables many enterprise applications, and if each big enterprise sets up their own captive network, the telecom revenue reduces. COAI statement. COAI is the telecom representative body. That statement says, and I quote, "Spectrum should not be provided on an administrative basis as it leads to no business case for the rollout of 5G networks in the country. If independent entities set up their private captive networks with direct 5G spectrum allotment by the government, it will diminish the revenue so much so that there will be no viable business case left for the telecom operators, and there will not be any need for 5G rollouts by the telecom providers. And hence, clarity on this was needed. CLSA says that in the upcoming 5G auctions, the winning telecom company will be paying a lot of money. And if that 5G opportunity is 40% of the 5G revenue, and that is going to get diminished, there is a big risk of dilution of 5G-related revenues for the telcos. If enterprises set up their own captive networks, clarity on this was needed. But right now, this is a new dimension which has been introduced in the run-up to the 5G auctions. Back to you.
Reema, many thanks for joining us. And of course, we will be tracking the 5G auction, which kickstarts on the 26th of July, very closely right here on CNBC-TV18. That's coming up for you. But right after this break, it's the Editors Roundtable, where CNBC-TV18's editors, Sonia, Anuj, Prashant, Nimesh and Nigel, sum up the week that was and get you trade ready for the week ahead. The Editors Roundtable coming up.